Hi, this is CH. This video is part of a series of videos titled My ABCs, or Absolutely Biased Comments, on one mutual fund per video, to share how an individual investor like you and I can try to find out more about a mutual fund from public sources and do some basic research or simple due diligence on the fund before deciding to buy the fund or walk away. Some quick disclaimers before we start. This is not a product sales pitch or a recommendation to buy. I am not sponsored by anyone to do this video. Please do your own research and be clear about the product features and risks before taking any action. The information shown and mentioned in this video is accurate as of the date stated here. In this video, I will be talking about the United Sing Dollar Fund from UOBAM. Now, the first thing we need to figure out as an individual investor is where can we obtain information and documents on the fund. UOB, as one of the 3 local banks in Singapore, is a familiar entity for Singapore retail investors. UOB's asset management business, or UOBAM, has a pretty comprehensive website for Singapore investors and is mainly catered to the retail investor segment. Majority of the fund information can be obtained here, although there are some stuff that are strangely missing, which I will go through. I would normally suggest Fundinfo as a third-party website to get fund documents, but this is one of the rare cases where the documents are not available on Fundinfo public website for this fund, so we will skip this one. You can of course also get some information from your distributor, which is your bank or online platform that you buy funds from, as long as they have the fund on their offering list. UOBAM provides on the website a list of online platforms that offer the fund. And finally, the web is always readily available, waiting to answer your search queries. Before we go through the fund details, let's spend a quick moment to understand who the fund provider, UOBAM, is and what they are good in. UOBAM is the asset management business of United Overseas Bank, or UOB, which is one of the 3 local banks in Singapore. UOB is a household name, tracing its roots back to 1935, when its former name, United Chinese Bank, was founded. UOBAM, in turn, was established in 1986, which means it has over 35 years of presence to Singapore retail investors. Through the years, UOBAM has been establishing businesses or joint ventures in the Asia region, with the most recent being 2019 when they set up PT UOB Asset Management Indonesia. UOBAM aspires to excel in Asia. As such, the core product offerings are Asian fixed income and Asian equity solutions that have the highest demand from Asian investors. That being said, over the years, they have also expanded their offerings in other exposures and asset classes, either via their own products or through partnerships with other fund providers. UOBAM manages 33 billion Sing dollars worth of AUM as of June 2024. The United Sing Dollar Fund is the only sub-fund in the United Choice Portfolios 2 fund family, which is quite uncommon to see, considering UOBAM has various other fund offerings available. The fund has a very straightforward and simple fund strategy. The main objective is to outperform Sing dollars deposits by investing in money market instruments as well as high-quality, short-duration investment-grade government bonds and corporate bonds. The benchmark used is the 6-month compounded Singapore overnight rate average, or SORA, which can be used as a reference for 6-month fixed deposit rates for Sing dollars in Singapore. The fund changed its benchmark twice in the past, not because it was trying to do some funny business, but because the old benchmarks were discontinued, so they didn't have a choice but to change to a new benchmark. The fund's strategy is simply to construct a laddered bond portfolio with bond maturities across a 3-year time frame and stagger the maturity periods. In an environment of rising interest rates, the capital from matured bonds in the fund will be reinvested into higher-yielding, shorter-dated bonds. Bonds that mature in the current year will be reinvested at the higher interest rate. Through this, the fund aims to ride the momentum of rising interest rates for the purposes of enhancing total return for investors. In an environment of lower interest rates, the capital stays invested in longer maturity bonds and continues to earn higher yields. This approach can be easily replicated for investors with larger pool of investment monies that can afford to buy at least 10 vanilla bond issues for diversification and can actively monitor their portfolios to do the reinvestment when the bonds mature. However, for most retail investors with smaller pool of investment monies, going via a mutual fund or ETF is a much more practical and efficient solution. In essence, the fund's strategy is to minimize downside risk by investing in high-quality bonds to avoid default risk, and also short maturity bonds to reduce interest rate and price volatility, and with that, to be able to generate enhanced returns that are above the Sing dollar deposit rates. Finally, the fund through its distributing share class serves to provide a steady income to investors. Additionally, the fund prospectus provides further elaboration on the investment approach of the fund. It is stated that the research process is fundamental, valuation-driven, and bottom-up in approach. There is a slightly different approach for the credit selection process for Singapore and Asia regional bonds versus US and Europe bonds. For Singapore, Asia, and emerging markets, the analyst team fully covers the credit analysis and selection process. This is possibly due to the team having more confidence in their expertise for regional bond markets. For US and Europe, the analyst team additionally uses a quantitative credit risk model as well as an asset correlation database in the process to manage any potential additional risk. Given the benchmark of the fund is 6-month SORA to represent Sing dollar deposit rates, there is nothing to compare against in the fund portfolio construct. The screenshots here are from the October 2024 fact sheet. UOBAM is a bit strange with its naming convention for their fact sheets. You will see the fact sheets stating November at the top of the page, but all data used are until end October only. While the fund strategy has no stated restrictions and there is no elaboration on currency exposures in any documents, the fund appears to try to minimize FX risk by focusing on Sing dollar denominated bonds and on Asia regional countries, possibly due to the expertise of the credit team. Sing dollar denominated bonds are sometimes scarce in the market, so the fund has to go beyond Asia and also possibly invest into non-Sing dollar bonds and then hedge the exposure back to Sing dollars. Looking at country allocation, besides Singapore as the largest exposure, the rest are mainly Asia regional countries, and to a smaller extent, US and UK. There might be some other small Europe country allocations under others. Sector allocation shows only 12.74% in government bonds, as there is probably not much upside going for short maturity government bonds. Financials are the biggest exposure since it is quite common for banks to issue Sing dollar denominated bonds for their currency management purposes. The fund fact sheet provides only top 5 holdings, which in any case is not too useful for bond funds. There seems to be a cap of 2% for individual issue exposure to contain single issue risk in the portfolio. The fund holds only about 120 issues, which looks a bit low compared to other general bond funds, though this is probably again due to the limitations of Sing dollar denominated bonds available in the market. Overall fund statistics look decent, with average weighted maturity at 1.43 years and effective duration at 1.36 years, so interest rate risk is minimal. Weighted average credit rating is BBB+, which looks acceptable considering the bond exposures are all short duration investment grade, so credit derating risk and default risk would be low. The portfolio weighted average yield to maturity is 4.1%. That is comfortably higher than the current 6-month compound SORA, which looks to be around 3.37% from Google results. At over 2 billion Sing dollars AUM and still growing healthily, the fund looks like it is able to maintain the current portfolio construct comfortably. UOBAM strangely does not mention about the fund manager at all in the fund fact sheet and in the fund specific webpage. Joyce Tan is the fund manager for the United Sing Dollar Fund, and she is also the head of Fixed Income Asia and Singapore at UOBAM. There is a very small photo of her found in the fund commentary document. There is a short mention about her and also a video interview in the fund highlight webpage, which mentioned that Joyce has managed the fund for over 15 years. Googling found an old fund supermarket material that stated Joyce joined UOBAM in 2007 and has been managing Singapore fixed income portfolios as well as covering Asia financial credits since then. So with over 25 years of investment experience by now, she certainly is well equipped to manage this fund. There is, however, no information available on the credit analyst team that supports Joyce. It would be good if UOBAM can spend some effort to disclose more information on the people involved in the managing and running of the fund. The United Sing Dollar Fund is mainly catered for local retail investors, so the main currency share classes are Sing dollars and US dollars hedged. UOBAM standard retail share class uses the alphabet A, although there is also an S for retail but with special features. Accumulation share class is available for both Sing dollar and US dollar. And as usual, these are the ones I would suggest investors to go for if there is no need for income. Distribution share classes are all with monthly distribution frequency. Besides the A accumulation Sing dollar that was created at inception in 1998, the other share classes were created between 2014 to 2019. The A and S share class charges a management fee of 0.63%. TER is not stated, but other expenses should not exceed 0.5%. Of the management fee, UOBAM can pay up to 63.49% to distributors as trailer fees. Given the fund is a Singapore domiciled unit trust, and the strategy is low risk and suitable for retail investors, the A accumulation Sing dollar share class is eligible for CPF OA and SA investment. For more information on CPF investing, please refer to the CPF website directly. Distributors can charge up to 2% subscription fee for the A and S share classes. The A Sing dollar class currently pays about a 4% annualized distribution, which is a decent level above the benchmark of around 3.37%. The S Sing dollar share class was created to offer a higher distribution yield and currently pays about 5% annualized distribution. I think this S share class is quite redundant, and the fund is good enough with just the A share classes. The most successful thing UOBAM has done for the United Sing Dollar Fund is the showcasing of the fund's performance. The fact sheet shows the usual cumulative line chart plus the annualized performance data, which all look quite decent. The fund delivered 2.12% per annum in the past 10 years, compared to 1.54% for the benchmark. Only the 3-year period was lagging, mainly due to the bond market correction in 2022. The fund highlight webpage provided additional details, with the past 10 years calendar year performance showing the fund has mostly outperformed the benchmark except for 2018, 2021, and 2022. There is also a very useful chart that overlaps the cumulative line chart with key market events, so that investors have a better understanding of how market events impacted the fund. Also included in the webpage is the fund's drawdown during various recent market crises compared to key asset classes. That also shows the fund's ability to minimize downside risk. Last but not least, there is a fund brochure document that contains the full 26 years of calendar year performance. The fund only had two negative years, which was 2008 and 2022. It can be seen quite clearly from the chart that the overall performance through the years has been more than good enough to compensate for these two down years. All in all, I would say the performance of the fund is pretty good, which is also why the fund has been one of the top choices for Singapore retail investors through the years, even as new competitors appear in the market. With that, let's summarize our findings and start with the good stuff. UOBAM is the asset management arm of UOB, which is one of the three local banks in Singapore that comes with a long heritage. So it is a household brand for retail investors. The fund strategy is straightforward and simple, which is essentially a low-risk laddered bond portfolio to try to outperform Sing dollar deposit rates. Joyce, the fund manager, is well experienced with over 25 years in Asia credits markets. The fund since inception in 1998 has delivered a very decent outperformance versus the benchmark, through a relatively stable journey and with low drawdowns, especially during market crisis. Next, let's talk about the bad and the questionables. The one main thing I found lacking from UOBAM is the information on the fund manager and the research team. Some write-ups or features on them would be good, besides the one interview video of Joyce. Another not so critical thing is the S share class that looks rather redundant, as it is paying just 1% more than the A share class in terms of distributions, and moreover, the payout yield is not sustainable by the portfolio yield. All things considered, I think the United Sing Dollar Fund is a decent pick for investors who are looking for a solution that gives that slightly more returns than a normal Sing Dollar fixed deposit, and without needing to take on too much more risk and volatility. This concludes my absolutely biased comments on the United Sing Dollar Fund. Would you invest in the fund or give it a miss? Or are you already invested in it? Do drop a comment to let me know what you think. Additionally, if you find this video useful and would like to see more related contents, please click on like, subscribe to the channel, and share this video to your friends. Thank you and have a great day.